Friends, welcome to this part 2 video on income tax section 80C. Hope in the previous video you would have learned what are the various contributions which are eligible under section 80C. In this video you are going to learn how your investment declaration submitted by you to the employer will have an implication on your tax planning at the end of the financial year. We have two parts here. One is the investment declaration which is submitted by Mr. A and Mr. B, and we are also going to do a tax planning calculation for both Mr. A and Mr. B to arrive at the total tax payable by these two gentlemen, and also conclude that who have done an efficient tax planning. Let us first move to the investment declaration submitted by Mr. A and Mr. B. Mr. A, who is very aggressive in nature, who is a risk taker, have contributed 25,000 rupees in unit-linked insurance plan, and also contributed 50,000 rupees towards equity linked savings scheme, which is otherwise known as tax saving mutual fund, and he is also eligible for 30,000 rupees which he is contributing towards provident fund on a monthly basis. He is also having a kid for which he is paying a fee for his or her education, which is also eligible under Income Tax Act section 80C. So he have fully used the limit of income tax eligible limit of rupees 1,50,000 rupees. Whereas if you take Mr. B, who is very conservative in nature, his contribution towards investment scheme is completely nil. He is only eligible for a default exemption, which is the provident fund contributed by him on a monthly basis. The total amount rounds up to 30,000 rupees. He is a firm believer in investing in real assets, so he have started taking a home loan for which he is contributing towards a EMI, for which he is eligible under Income Tax Section Act for his total principal contributed towards the home loan for the current financial year. So the total investment declaration submitted by Mr. B is 55,000 rupees. Now let us move to the calculation part to understand who have done an efficient planning, either it is Mr. A or Mr. B. Assuming the salary for Mr. A and Mr. B are same, and they also got a yearly bonus of 1.25 lakhs, which needs to be considered while planning their income tax. So to arrive at the gross total taxable income, you need to sum the income from salary as well as the bonus received for the financial year for both Mr. A and Mr. B, and we found it to be 7.75 lakhs is the gross taxable income for Mr. A and Mr. B. This is the key area which is going to be different for both the individuals, where Mr. A has fully utilized the eligible limit of rupees 1.5 lakhs, but Mr. B have only used 55,000 rupees under section 80C. To arrive at the net taxable income, you need to deduct the gross taxable income with the eligible limit under section 80C. To calculate for Mr. B, you have to press Ctrl C and press Ctrl V. Now we move to the calculation part. As per the prevailing income tax law, the initial 2.5 lakhs is completely exempt from income tax, whereas in second slab the difference amount of rupees 5 lakhs to 2.5 lakhs should be taxed at 10%. This holds true for even for Mr. B, since his taxable income is more than 5 lakhs. Now let us move on to the third slab. 5 lakhs to 10 lakhs should be taxed at 20%. This is the area you need to be very careful, because the income levels are capped at 6.25 lakhs for Mr. A and 7.2 lakhs for Mr. B. Hence the difference amount of 6.25 lakhs to 5 lakhs should be taxed at 20%, and the difference amount of 7.2 lakhs to 5 lakhs should be taxed at 20% for Mr. B. The final slab is not applicable for Mr. A and Mr. B. The reason is their income is already capped at 6.25 lakhs and 7.2 lakhs respectively. If their income is more than 10 lakhs, then the final slab is applicable for them as well. Now we have to sum the total tax payable by these two individuals. Write a sum function and select the respective cells to arrive at the total tax payable. Press Ctrl C and by placing the cell you just press Ctrl V to arrive at the total tax payable by Mr. B. The educational cess is 3% on the total tax payable. Similarly for Mr. B, now we need to arrive at the total amount payable by Mr. A, which is 51,500 rupees, and by Mr. B it is 71,070 rupees. So as per the total tax payable, who is more efficient in his tax planning? Is it Mr. A or Mr. B? It is Mr. A, because Mr. B has paid 19,570 rupees of income tax more than Mr. A. Hence Mr. A is found to be more efficient in his planning because he has utilized 100% of the exemption limit which is allowed under section 80C, whereas Mr. B has underutilized the income tax section under section 80C limit. He has underutilized only 37% of the maximum limit allowed. Hope this video would have given you a knowledge on investment declaration under section 80C and how it is going to impact on the tax planning of Mr. A and Mr. B. To learn more about income tax, just log on to www.finschool.in. Thank you.